Hey guys, I hope you're doing great. For this week's quick video, I want to discuss why it makes sense to buy a home now before rates drop later on this year. And my muddy crystal ball says that that's exactly what's going to happen. If you've been watching the market and the economy, rates went back up to the high sixes, kind of like the low to mid sevens this past week. That's due to a couple of factors. I'd love to get into that more, but I don't really have a whole lot of time right now. So if you want to know more about that, please give me a call. But real quick, the factors are really the jobs report came in a little bit higher than what was expected or anticipated. And the inflation number, that arbitrary 2 number that the Fed is trying to get to, we're not quite hitting it the way the Fed wants. Those are a few of the big drivers of rates right now. So we went from the Fed cutting the federal fund 5 times this year to 3 times, and now most likely probably just 1 time later on, like maybe in December. But what that means for folks wanting to buy a home now or in the near future is that rates probably will be staying in that kind of 6 to mid 7 range until those cuts come. Once the Fed starts cutting rates, we should see rates trend back down, potentially into permanent low 6s, high 5s. That'd be awesome over the next 8 or 12 months, most likely. And again, my muddy crystal ball is telling me this. With that said, it's going to be better. I think it's going to be better to buy now instead of waiting for those rates to drop. And the reason for that is our market, as we all know, if you're out there in the market at all, we have an inventory shortage. And once rates drop, everyone that's thinking that they're sitting on the fence, it's going to get even worse. Everybody's going to be in the market, and the competition is going to get even rougher. Right now, we're seeing 2, 3, maybe 4 offers, properties. It's going to jump to 7, 8, 10. And do the math. If you have a $400,000 mortgage, and you wait for rates to drop 1%, it's going to save you about $3,100 a year. That sounds awesome, great savings. Everyone loves it, and that's why they want to wait a year to save that few $1,000s. But what does that wait cost you? Real quick, let's assume your rent is $2,500 a month or $30,000 a year. And now, due to competing offers, once the rates drop, everyone's getting off the fence and into the market. You can probably expect to pay somewhere in the range of 5 to 10%, if not more, for that exact same property today in a year from now. So if you're buying a home that's $500,000, the cost of that home is going to be roughly $550,000 or $50,000 more. So you wait a year, you spend $30,000 in rent, you add $50,000 in higher sales price, so that $3,100 in savings turns into a potential loss of $80,000 plus the opportunity costs. But all of this assumes that you can afford to buy a home now where rates are. You buy the home that you want to stay in for a longer period of time. But for me, it's all about looking at the data and not making an emotional choice, but looking at the dollars and cents and the pros and cons. But the bottom line is, whether you're renting or you're buying, you're paying a mortgage. The difference is, are you paying a mortgage for your family wealth accumulation or someone else's? That's the question you have to ask yourself. Call me if you have any questions. Love to talk to you about all this stuff, guys. Take care.